to do an overview of Onyx Markets, I have Chadney Brambat, who is an account manager at Onyx Markets and has been involved with the retail industry before. So Chadney, why don't we just go through like a brief summary of what it is?
So to start, the whole offering is something that's completely brand new. So it's never been done before. So while it might seem confusing to the retail investor or the seasoned oil trader, it's essentially a retail offering of oil swaps via spread bet and CFD. So to clarify what that is, if you're not aware, spread betting is essentially speculating on market movement, whether it goes up or down. So you'd buy or sell. And that's done in a currency per point movement. So for our purpose, it will be dollars per point movement. And contract for difference is CFD. And that's essentially one lot is one contract. And it's the same thing. It's speculating on whether the price goes up or down. That's the retail offering, essentially. Why it seems confusing is basically because this industry has been semi-invisible to the retail investor until now. And then the more seasoned oil trader, they're very well versed in oil swaps, but they're new to the whole leverage landscape. Mm-hmm. So you are paying on margin. This isn't just outright investing. This is you paying a percentage of the notional value of a trade and getting the same exposure. So that's just the basic overview of what we're offering you.
Okay, so I guess the big elephant in the room is like, why bother at all? Why is this interesting?
Why is this interesting? It's a good question. Why it's interesting is because we're not just offering you another asset. I mean, retail brokers will offer you all different types of contracts and asset classes, and some take off and some don't. But in this instance, we're offering you something that actually affects our global economy. Mm-hmm. Every single person watching this video, myself, Greg included, we all consume these products.
Mm-hmm. Okay, so I guess the first big question is, why would a retail investor or anyone be interested in this specific market?
That's a good question. And I think the reason why the retail investor would be interested in this is because we're not offering you just another asset. Essentially, retail brokerages are constantly giving you new contracts and new products and asset classes, and some take off and some don't. But in this instance, we're offering you something that actually affects your global economy. Every single person is a consumer of these products. That's the audience at home, that's myself, and Greg, that's you included as well.
Yeah. I think that's a good start, right? As in, like, if you compare it to, say, crypto markets, I mean, crypto people know or believe it will have quite good use in society at some point, and it's getting there. But, oil's had use for, 60, 70 years, right, for everyday people. So you just haven't had the access to the real market for this, right? The real wholesalers market that actually impacts your price. You're trading like really blunt instruments, right, at the end of the day. So it's, I guess it's more like foreign exchange in the sense that you need foreign exchange to exchange your money. It's not just for speculating, right? You are using it to go abroad on holiday or anything like that. So it's the same with oil, right? It's not like you can avoid your exposure to it. When you make orders, deliveries from Amazon, you've got shipping prices embedded in there. You have road freight, so basically diesel prices to get it to your home. You've got electricity, which has some impact, how you make the materials in your home. You've got impacts there, like PVC equipment, things like that. It's just endless and endless. Yeah. So whether you directly use it at the pump as a driver, it's kind of only one little aspect. But either way, this part of the economy is just being closed off. So it's almost like bringing you a market that hasn't existed before. You can't just look at it like, oh, I could trade oil before, and now I'm still trading it. It's kind of a whole new market, really, is probably the best way to think of it.
100%. And I think retail investors at the moment are probably exposed to things like Brent and WTI.
Yeah.
As you said, they're blunt instruments, and they're also essentially the Brent futures contract. So in the oil swap market, that's showing you the expiry up to 60 days. So you're not getting an accurate reflection.
Forward, yeah.
Forward, exactly. Yeah. So you're not getting an accurate reflection of what the market price is now, and it's also not the direct oil you're consuming. It's not the gasoline at the pump. It's not regionally specific. So if you want to start trading or hedging yourself against the risk of prices going up, then what you're trading now and what you're exposed to is literally just like the tip of the iceberg. It's like a microcosm of what oil actually is. And I can say myself, this was a completely new world to me. I didn't even know half these contracts existed.
More than half, I'd say.
More.
But that's the thing. I think you put it really well. If you're to say hedging for the everyday person, people have scoffed at that already when I've mentioned it, but I don't really understand that, because you are going to be budgeting for your use of gasoline, use of diesel if you're driving, and I'm sure other things. But if we stick on those two of the transport fuels, you will have savings for summer or some big driving period. And if that doubles in price like it did in 2022, you got no way to protect yourself. Like you didn't have any way to protect yourself. Even if you could see Russia getting towards Ukraine, there was nothing you could do about protecting yourself really from rises in gasoline prices. Whereas if you'd had access to these contracts, you have a very legitimate way of protecting yourself against price rises. And that is hedging. So it's like converting your foreign exchange early because you think the dollar's going to rally. You know, this is going to impact your day-to-day life. So now you can do something about it. It's empowerment, right? So before anyone scoffs at the idea of hedging, I think it will become more mainstream.
People hedge their currency risk.
Exactly.
So I saw that a lot in retail trading. Somebody's inherited a certain amount of money. It could be from a relative, and they'll hedge that amount of money through various different brokers. So it's the exact same thing. It's just you didn't know the way to do it until now. And I think it's really important for everybody watching this video that this is new, and we do provide the education and material. And beyond it being a hedging tool, there also is the side of speculation. I mean, you mentioned cryptos recently, like. At first, all you know is Bitcoin, you learn a few more cryptocurrencies, but I think that is more complex to understand, to sort of navigate in your mind than this whole sphere of oil contracts that actually relate to physical products. I think that's easier to grasp. I think there's a lot more to it, obviously. There's more than just like supply and demand. You know, there's storage economics, there's transportation, there's admin costs, there's everything. There's a lot of things going on there. But if you can wrap your head around cryptocurrencies, you can probably wrap your head around oil.
For sure.
And beyond that, you can speculate. So people are between different differentials in the cryptocurrency market. So it's the same thing in oil. You've got crude is probably what you know right now, but there's a whole refining process and so many differentials and ways to trade oil. So it's just something you'd need to kind of get stuck into.
And I think that point about differentials is key to understanding and getting value from this market. But like we appreciate, right, if you're new to it, that will take a bit of time to kind of get familiar with the language. At the moment, we're going to be offering outright prices, you know, day one. And that will get people familiar with what you're saying, the region specificity, like the different gasolines in different regions, the different diesels and such and such. So that is the lay of the land, and probably the most use those contracts have are for hedging. But they are very, they move quite closely, relatively closely to Brent and WTI. So they still offer more of a return or more specificity. But I think it gets really interesting when you start talking about those products versus crude or versus each other or versus different regions, because that really is much more reflective of the oil economy, really. So when you've got, I always say this, like picking up a newspaper, you see a headline that's impacting the world, like Trump right now, right? The tariff situation, it's very hard to buy or sell Brent on the basis of tariffs. In fact, there is no real material justifiable impact, I think, even after all these headlines. Whereas mayhem is going on in the differentials. You know, right now it's a very, very busy time in the trading floor because there's a lot of volume, in fact, a lot more volume being traded on Asia versus US, Asia versus Europe differentials for all the products like gasoline, naphtha, etc. Because obviously tariffs import-export economics. Every time freight prices or shipping prices move around the world, that impacts the differentials. So there's a lot going on. There's always a way to reflect what's happening in the global economy using this ecosystem, but you've got to get familiar with all the intricacies. And then you've got like the time spreads. But again, we're not going to go all through it now, but the point is that begin the journey because there's so much going on. And I think before you know it, like it's again, going back to crypto, how much trading and sophistication there is now. There's so many thousands and thousands of coins. It's kind of going to be the same process, I guess, for the new investor to just slowly learn more and realize the intricacies.
100%.
Yeah.